The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 6th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs, folks. You know, you and we have no idea of the giant capacity we can immediately command when we focus all of our resources on mastering a single area of our lives. And one of those areas of our life that I believe we should master is trading. Another is time. You see, once we master time, we understand that typically we overestimate what we can accomplish in a year, but we underestimate what it is that we can achieve in a decade. Don't ever give up, folks. Don't ever give up. You know, another reason that some of us don't achieve what we truly want is that we never direct our focus. We never concentrate our power. Many dabble their way through life, never deciding to master any one thing in particular. Success? That comes from taking initiative, from following up, from being persistent as all heck, and eloquently expressing the depth of your conviction. So the question is, what simple action could you take today to produce a new momentum toward success in life? This much I know to be true. The path to success is to take massive, determined action. There's no abiding success without commitment, folks. If you want to be successful, find someone who's achieved the results you want, copy what they do, and you'll achieve the same results. This time is now, right here, to master anything that you want in folks' life. Mastery, it is a beautiful thing. And you speak about mastery, our man Basil Chapman, he's got a Master Trader Workshop. That's coming up this Friday. That's one way you could take some massive determined action. You could also go over to the homepage of TFNN.com. You could take advantage of our Tiger Dollar promotion. You know, it's that time of the year, believe it or not. And I saw my first Christmas tree last night. It was like, boy, they can't wait till Thanksgiving any longer. They got to get up in that Christmas season right now. Well, look, the holiday season is here, and people are going to be buying you gifts. Have them buy you some Tiger Dollars. Have them buy you Tiger Dollars so that you can continue to educate yourself, take advantage of all the great things that we have here at TFNN. That's the kind of massive determined action that will get you to where it is that you are now, to where it is that you want to go to. Well, let's go check out where these markets are going to right now. They're going to the moon. The Dow is up 108 points. That's traveling out at 15,726. S&P up about 10 points, trading out at 1772. Composite up 10 points as well, trading at 3950. Russell 2000 up 3 points, lagging. Interesting. It's lagging the other indexes. It's up at 1106. Apple's up 78 cents. Microsoft up $1. Microsoft having a couple of nice showings out there. Google up a couple of bucks. Cisco up 22 cents. Leading the charge to the upside, Imperva Inc. IMPV is the ticker symbol. Up 30% out there after posting a loss of 15 cents a share versus 8 cents a year ago. Must be something else behind this equity. We didn't get a chance to take a look at individual equities last show. We will do that during this show. You've got Interactive Intelligence, IN up 17, 18% this morning. Open Table up 12%, trading out at 79.38. Ralph Lauren up 4.5%. Financial Engines, FNGN up 14%. Deal Track Tech, TRAK, that's up 12% this morning. Haynes Celestial up 5%. You've got, what else here? Let's take a look to the downside. Tesla Motors off $20 right now. We'll see if there's some volume behind that move. Mercado Libre, that's off 10%. That's trading out at $119.32. Priceline.com down $5, trading out at $10.77. NPS Pharmaceuticals off 22% here this morning, down $6 and change. Our call number 877 927-6648. Give me a call, folks. Would be happy to take a look at your stock chart. Let's start off by taking a look at the S&P 500 right now. S&P 500 trying to test the top of that key reversal, bearish in gold. Well, it looks like a bear sash candle out here on October the 30th, the high of which is 1775.22. We have not hit that high yet today. Looks like you're trading inside that swing point. It ought to be tested. We'll see if it gets rejected. If you get a close above 1775.22 today, that will be a breakout, most certainly out there. And what does that set up? Boy, that sets up a move to about 1850 right now. The daily chart has a 1,000 point primary trading range boundary lines, and if you close above, which is 1750. You're certainly trading above 1750. That brings out the old 1850 mark. Certainly the midpoint, 1800. That's a close above 1775. We're not there yet. Absolutely not there yet, but that's one of the things we want to be paying attention to. Of course, the Dow, we take a look at the Dow. The Dow is taking on its consolidation. It's 1,000-point consolidation level, so we'll have to see how it ends the day. It is over the swing point from October 30th. That high is 15,721. We're trading at 15,728, so we're certainly going to get a signal from the Dow today from those 30 stocks out there. We'll take a look at some of the stocks within inside the sector. In fact, if I just switch over on a different tool out here, is anything green, or anything green, is anything red? You've got Intel's down 3 pennies, no big deal, and Home Depot's off a penny. Otherwise, everything is lean, mean, and green out there. That's on the Dow stocks. But let's come back and take a look here at the other indexes. The Russell 2000, as I mentioned, that's struggling here this morning. That has shown the most downside potential inside the market. It is up it's up 0.3%. You've got the Nasdaq Composite and the Russell 2000, what have been the two strong legs in the market. They actually are the two weakest legs as we speak here right now. The B point here, that's not going to be the B point of a potential A to B equals CD down. Right now, you've got the Russell 2000 trading above the high from 2 days ago from November the 4th at 1108.86. It's trading back, it's gotten above that level. It's trading back below it here this morning, so not really a huge party inside of the Russell 2000. In fact, let's go switch over and take a look at the composite. The composite here, which has been traveling in a sideways consolidation range here for, a good 10 trading sessions at least since October the 18th out here. This has not broken out. Something to think about. So the two strong gals, have not done anything out here. Well, they're certainly not breaking out like the 30 stocks inside of the Dow. Let's go take a look here at the NDX 100. The NDX 100 actually doing the same thing. We see the same type of signal here as the composite, as the Russell 2000. Of course, this is going to have to break out of this little congestion area if these markets are truly going to move higher. It's not going to be the Dow that is going to go ahead and move and take everything to the upside out here. So that's on the NDX. If we take a look at the New York Stock Exchange, let's see what we have going on here. New York Stock Exchange trading inside its key reversal session from October 30th, the high of which is 127.63, has not made it up to the top there so far. The intra-session high, and this looks like just another consolidation sideways move out here inside the New York Stock Exchange. Thus far, the high 10.083.47 out there. What else are we going to look at? Well, let's go as far as some of the other indexes that we should peek in on. The trannies. Well, here is the VIX index. Now the VIX index is traveling. It's actually down a bit, but it is off of its session. Oh, that was not a smooth move out there. Don't know what I did, but was not what was intended. Those were unintended consequences for sure. Let me go ahead. I can put up the, let's do this here. Let's put up the 50-day exponential moving average on my screen. Let me go back in here and do that. I must have hit some line. Let's get rid of this. Let's turn this one off. Let's turn this one on. Let's make it a 50-day exponential moving average, and voila, there's the magic. So the 50-day exponential moving average inside the VIX, that's at 1457. You're trading out at 1312 right now, but the VIX is not at its lows for the session. It's actually at its highs for the session out there. That is kind of interesting. Very, very interesting, as Schultze would say. Let's take a look here at the trannies. The trannies here, they did break out yesterday. There we go. I got something wrong with this tab here. I can see that just because of the speed. The transports did break above their most recent area of resistance. Looks like it was also tested here yesterday. But the trannies, which broke out 2 days ago, broke out on November 4th, got above the resistance here. If you take a look at it, it's this little bearish engulfing candle that took place on October 30th, just as the other indexes showed a reversal candle. But the transports broke out with nice wide price spread on November the 4th. But today, they are not exactly at the party out here. Huh. How interesting is that? Almost makes you think that maybe this little breakout here is nothing more than just testing these consolidation levels that we have been traveling in for quite some time. Let's go take a look at the SOX index here, Philadelphia Semiconductor Index. Well, geez, Louise, that hasn't broken out. So how is this market going to move higher without the NASDAQ Composite, without the Russell 2000, without the SOX moving to higher ground as well? How is that going to happen? It won't happen, folks. That's the whole point. It won't happen without that taking place. Let me switch over real quickly, see what the underlining under the covers is going on. So in the New York Stock Exchange now, we're down to 991 net advancing issues. It needs more than 1155 today, but that thing has been a little tug of war along the zero line out there. But yesterday, we did have some pretty darn good market breadth to the downside, volume to the downside, which was giving a signal out there that under the covers, it wasn't looking too good out there. All right, now we've got Goldilocks. That's trading up $9 right now. Let's go check in on the metals. Gold trading out at $13.1760. If you missed the first show, go back and listen to the archive today. I won't go through the entire thing here with you, but really showed you on the longer-term basis what's going on with gold, what's going on with silver, the significant resistance that we're up against. But let's go take a look at the daily chart here inside of gold. And just another small-bodied candle to the upside here. It's trading inside that little sign of strength out there, but it's got some significant resistance. If you go take a look at the weekly charts, we're not up against that area as we speak right now. But gold not really doing a whole lot. No conviction, most certainly, behind the move. The King dollar, that's back 27 cents right now. You'd think with the euro moving higher by 70 cents, King dollar being back about 27 cents, you'd think that gold would, if it was really bullish, would start to participate here, just simply because of the correlation between the U.S. dollar index and the Goldilocks, but we are not seeing that take place. Silver, high-ho silver, that's up about 1% here this morning. Let's switch back to a daily chart. That's a weekly chart that just popped on my screen here. But silver not really doing a whole lot. In fact, silver here down below that little rising price channel. All silver is now doing is testing to see if it wants to get back inside that. And in order to test that and see that, it has to be up by over 1% in order for that to be accomplished. Let's go take a look at light sweet crude oil. Well, you know what? There's the weekly chart for crude oil. So when we get back from this break here, we'll take a look at what's going on the daily chart for crude, and we'll take a look at the longer-term picture of light sweet crude as we take a look at the weekly continuous contract. Right now, Dow's up 97, S&P is up 9. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, the Dow is up 101 points. S&P is up 8. Composite up 4 points. And before we went to break, we were taking a look at the continuous contract for light sweet crude out here. I'm going to go ahead. You can see a number of different lines on my screen. Hopefully, they don't get you dizzy. I've got the different quantitative easing dates out here. Well, actually, what I should say is I've got QE 1, 2, 3, and Operation Twist. I don't have QE Infinity listed here. I probably ought to go ahead and put that on. But you can see here that light sweet crude, which is trading out right now at 94.39. This is a weekly chart that we are looking at on my screen. Looks like, number one, if we take a look at coming off the last swing point low, that is April 30th on the weekly chart. That's at a price of 85.61. We go up to the 112.24 price point out here. It's below the 0.618 level, which is 95.78, and it's above the 91.31, which is your 0.786 retracement area. Looks to me like that is where light sweet crude wants to get down to, about the 91.31-ish range. It will run into the trend line coming off of the high out here back in July of 2008, out at 147.27 out there. And if you use the top of that as a trend line, it's a black diagonal line going across my screen. You can then hit as your next touch point, or I did, the March 2nd, 2012 level. So it looks like that is where light sweet crude is moving down into. We can see after light sweet crude made its high out here, we haven't seen any bullish weekly candle session out here. So weekly trend is still to the downside. No bulls showing up inside of light sweet crude out here. And you can see on the weekly chart it is neither overbought nor oversold out here, so it has room to run to the downside and make that objective. Now, that is on the weekly chart out here. If we take a look at what's going on the daily chart did show us a 0.786 Gartley buy pattern, or close to a 0.786, I should say. We had a nice little 2.618 expansion of the B to C swing point. That gave us a price projection around 93.80, suggested that would be an area where we would start to see a pause. That's what we see taking place here today, but it really looks like 91.31. Now, because of it being inside the consolidation pattern out here, this is the 1 year consolidation pattern. Those are the two black horizontal lines going across my screen. What that says is price could easily go back down and test the bottom of that consolidation mode. It had to bounce. What you need to understand is it moved into an extreme area of the relative strength indicator yesterday, so extreme that it just simply has to work that condition off. And I think that's really all that we're seeing take place here today. So, just because a bar is green, that doesn't mean it's bullish. Just because a bar is red, that doesn't mean that it's bearish. It just tells you where price opened and closed, and it colors in the difference just to tell you which it was an up session from the open or a down session from the open. That's all that they do. They do not signal bullish or bearish candles out there. Now, when you move into an extreme overbought or oversold condition, the market just simply has to digest that and work its way off. And it's by evaluating that bounce where you get a real good indication as to what the market's next move will be. In this case here, just a sideways move is the likely outcome, then a move to 91.31 if it breaks through that area all the way back down to the bottom. That is on light sweet crude. Let's go take a look at the 30-year Treasury out here. Let's go see what bonds are doing. Well, if we take a look at the weekly chart here for bonds, you can see decidedly a downward price channel. That price is traveling within. The bottom of the channel, really well marked, has plenty of co-located opens and closes. I think the top of the channel line is pretty good, too. You've got the open of the session from April 2nd. You've got basically the open of the session here from April 19th as well. And then you've got certainly the open from last week, November the 1st out there. So looks like the 30-year Treasury here, it's run into its resistance up at this upper level at this descending price channel. That's what the weekly chart is showing us on the 30-year. If we take a look at a daily chart for bonds here, what the daily chart shows, oops, didn't mean to grab that, meant to grab this little anchor. What the daily chart shows is that it was traveling in a little bit of a, what ends up now being, as you can clearly see on the weekly chart. Let's put these two side by side. That might make it a little bit easier. So let's take down the weekly, and we'll take a look at the daily chart. So on the weekly chart, the one on the left-hand side of my screen here, you can see the downtrend channel line that price is traveling within. Now as we take a look at, and we take a look at the move here off of the bottom, so the bottom of the channel line all the way up to the top of the channel line, that ends up being a little subcorrection channel here. We can see that, in fact, here we see that on the daily chart. That's the one on the right-hand side. And yesterday's move was a move back below the little rising price channel that it was traveling in, and now it's clearly below that area and says, okay, time for lower prices inside of the 30-year Treasury. Right now, the NASDAQ Composite, it's going to turn red here just in a second. There we go. Just got to red. Red status inside the leader, inside the strength, inside 3,000-plus stocks out there. Something to think about. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, the Dow is up 79, S&P is up 5, and the first attempt at the catapult out there. Well, what is it? Is it the pole vault? Really, it should be the pole vault, right? The first attempt at the pole vault by the Dow got turned back. The bar fell to the ground. Of course, that bar that I'm referring to is the consolidation bar out here. We saw that level was hit with a wide-ranging bar. That was at the 9:30 to 10 o'clock open out here. So there should be another attempt at trying to clear or get to the top of that consolidation pattern out here. That's at the on the futures. That's at the 15,676 type level out there. But the first attempt, that was a failure. Turned back and fell back. Of course, if it can't bust it up to the outside or to the upside, it will try to bust it to the downside out here. So the consolidation continues, not until it's broken with conviction one way or the other out there. Will there be a strong move up or down out here? Just to be, it depends, it's not a bad consolidation level, 208 points inside of the Dow. Now, let's go take a look at what's going on in the currency world out here. Let's start off by taking a look at the Great British Pound. Speaking of consolidation patterns, that's what the Great British Pound is in. It couldn't bust it to the downside. Of course, we looked at a intraday chart, some descending price channel that the Great British Pound had broken out of. Now it's going to try to make its way all the way back up to the top again. That'll take in about the 162.59-ish level on the Great British Pound. Let's take a look at the U.S. dollar, Japanese yen. U.S. dollar, Japanese yen moving a bit higher. It's trying to get to the Gartley sell pattern, which will be somewhere in the 99.54, 99.73 type range out there. That'll set up your 1.272 B to C expansion of its swing points and would also be the 0.786 retracement of the move from the highs from September 11th down to the low on October the 8th out there. That's what it looks like the U.S. dollar, Japanese yen wants to do. Let's take a look here at the euro U.S. dollar. It is bouncing a bit this morning. We know the euro U.S. dollar moving down into a level of support. Never got down to test the real level of support, which was this black horizontal bar going across my screen, of course. At that level, it also had a nice little break, a nice show of strength by taking a look at the wide-bodied candle on September the 18th out here. So we are now seeing a bounce underway. Key is going to be, is this just going to be a normal bounce, setting up an A to B equals CD down, and then try to take on that support level right now that has not made the 0.382 retracement area. It should, which would get you up to about 135.9. That would just simply be a natural and normal move. That would be inside the euro U.S. dollar out there. Let's go check out natural gas. Let's go check out natural gas out here. Let's see what we've got inside of natural gas. This is a weekly chart for natural gas. Take a look at these price channels out here. If you take a look at the red lines, let me try to move this back a bit. Boy, I can't really size this up, and wish I could expand it for you. If you take a look at the red lines, that's the descending price channel. We see here that natural gas finally broke through that area. Broke through it with some conviction. That's back in March of 2013. Got up to the top of its rising price channel, which was then deflected. It's moved back down. It tested, tried to get back inside that descending price channel. Thus far, it is held. So that's a little bit of a bullish sign, or a good bullish sign for natural gas out here. If we're to end the trading session right here, right now, today, natural gas on the weekly chart would have formed a hammer candle right here. So close right around 349 to maybe 350, somewhere right around here, forms a hammer candle on a weekly basis, and that is at the bottom. And this is the continuous contract here, so it's going to look a little bit different if you take a look at each of the monthly contract expires. But in this case here, on the continuous contract, you've got a nice little potential hammer candle that forms. All depends on where this finishes out the week tomorrow. Let's go take a look at some of the spiders, some of the ETFs, and I want to take a look at some of these stocks here that are popping and dropping. But specifically, let's look at the technology sector, the energy sector, the financial sector. Inside of the technology sector here today, so we had a key reversal session on the trading date of October the 30th. The high there, 33.92. We got up and over it, or the XLK got up and over it, and closed back below it so far. It's trading right now at 33.89. Volume, 1.8 million shares versus 5.5 million shares from October the 30th. So you do have, at this point, a failure on price. Don't know about the volume. Won't know till the end of the trading session. Energy sector here just really having a sideways day, so nothing much to say. It also had a key reversal session on October 30th. What we can say here about the energy sector, it is weaker than the technology sector, which at least got up and tested that high out there. Let's go to Rick in British Columbia. Rick, thanks for calling. Thanks for holding. How are you today?
Hey, really good, thanks.
Excellent.
Yeah, I was going to tie in Newmont with the euro and the U.S. dollar.
Okay.
And very often, probably 90% of the time, if the U.S. dollar gets weaker, Newmont and gold stocks go up, right? I mean, because gold trades in U.S. dollars.
Yeah, absolutely. Yeah, I agree with that correlation. I agree with that. Yes.
Now, if you can put Newmont on a daily,
Yep.
you'll see that high volume low down there.
Yes.
And we're rallying right now, right? We're filling that gap. We could even go to 28.50 and test the highs. Now,
yes.
if you put it on a 10-day hourly,
10-day hourly, okay.
You'll just see you see the big gap up from $26. We did that on fumes, right?
Right.
And today we're up again, and on the hourly we don't really have the volume. We gapped up, but it's light, but we're moving.
Sure.
Now, if you look at the euro, it looks to me like the euro is making on a daily a head and shoulder top, and the U.S. dollar is making an inverted head and shoulder. And I'm just tying those two in, and correct me if I'm wrong, but I think that's what's happening with the gold here. So we're getting a little rally right now as the euro is bouncing and the dollar gets a little bit weaker. But you see, if you put the U.S. dollar on, for example, you see what I'm talking about?
Well, yeah. Well, so when you put all that together, as you're taking a look at it, so when you're taking a look at it, how are you using this to put on a trade? Are you just trying to get a feel for what the gold is doing, or the gold equities?
I'm saying if you got some gold stocks right now,
yeah,
and obviously earnings come out, they could gap up and et cetera. But
yes.
Usually they follow each other like geese. I would think you would want to start lightening up on this rally right now. Is what I'm trying to say.
Oh no! Look, I completely agree with I completely agree with that. If we take, I'll put the U.S. dollar index. DX,
you'll see right now we're making a right shoulder. We're making a right shoulder to go up to the 83 mark. And
go ahead.
Yeah, you go. No, that's fine.
What I was going to do for you first is just put the U.S. dollar index, which is on the Newmont chart itself. So if you're going to try to take a look at, so the red line that's on my screen right now, you got to take a look at it from a directional standpoint because they're both using different price levels, obviously. But if you take a look at it from a directional standpoint, to help you understand whether or not the U.S. dollar, and this is inverted as well. So I've taken the U.S. dollar index, I've inverted it, so a stronger dollar is moving down, which means that the equity, should move down from a correlation standpoint as well. But I agree with you that what correlates best to the mining equities is just simply gold. Because if I put the actual gold continuous contract up here, let me do that right now, because it'll look a little bit different than the U.S. dollar index. Sometimes that comes gets off center. So let's put the gold contract out here, continuous contract, and let's put that in we'll make that a black line out here, and we'll overlay that on the chart for Newmont. So this should be okay. So there's the actual. If you take a look at, and let me make it a little bit darker. Maybe make it a little bit easier for you and everybody else that might be following along with us on Tiger TV. So we'll make that line really thick out here. So if you just have if you're trading any of the gold equities out here, and if you just overlay, that's what the black line is on the chart, and overlay that on the chart, you can see how well that follows. So in order for you to be long the mining equities right now, you've got to have an outlook that gold is moving higher. I mean, you just have to have that as the outlook. And when I take a look at gold, did you get a chance in the first hour? Were you there on the first hour, Rick, when I was taking a look at gold on a longer term basis?
No, I didn't, and I was just curious what your thoughts. You think we're going to test 1,000 yet, or you think we're finished?
So I'm going to put that one to switch over to the two gold here, and it was kind of interesting. K. Rico sent me an email yesterday, and what it did was it forced me to go back and take a look at the longer term time frame of gold here. So I went back to my monthly charts to see what was out there, and when I took a look at the monthly chart, that's where my eyes went, oh man, look at this. So on the monthly chart here, the red diagonal line that I have on the upper part of the range, and that's one of Bud's descending price channels out here. And when gold made its low off of June 30th, 2013, all that it did was a full correction, sub-correction, inside that price channel. As it made its way up to the high here back in August, all it did was it got up and it tested the long-term resistance of that descending price channel coming up, all the way from its, at least from the highs back here in October of 2012. So I think when you take a look at gold, it's up. Now it's not up near that area right now, so it could bounce up there, just like you were taking a look at Newmont. You're saying, hey, it's going up on fumes. It could bounce a bit higher, and so could gold. But until gold breaks this descending price channel, this long-term one, it's got more opportunity to move lower than it does higher.
Well, that's what I'm thinking. I'm thinking that too. And I don't know if you get volumes, but the one charting service I have,
yes,
I do have volume sitting down there at 1250 on a daily. But
yes.
I don't know how reliable it is. I don't know if you see that or not.
Let's see. So on the daily chart, you're looking at 1250, which would be October 15th? Is that the?
Yeah, that low there. Yeah.
Well, that's got like about 186,000 contracts down in that area. 200,000 contracts maybe on October the 16th.
That's what I see.
So,
yeah, I see just over 200,000. And
what you really have is you got 261,000 on June 28th at the low down there.
Oh yeah.
Which is 1179.
Right.
So when I hadn't looked at the monthly gold chart for a while, and when I pulled that open yesterday just to send out a response to K Rico on my thoughts, I was like, wow. It's up against some really strong resistance. We haven't seen, all we saw was just a nice counter-trend rally so far. But the cool thing is, I think, Rick, when I take a look at that weekly chart or the monthly chart out there, is that if we see gold break above that descending price channel, that will be a real nice sign of a potential breakout.
Mm-hmm. Gold went from 252, somewhere in that range, to around 1900. So, if we do pull back to 1,000, that's just a natural correction, right? So.
Yeah, it is. Yeah. No, that's the thing. It really is a natural correction, because if we weren't paying attention to what the symbol was on the chart, we'd all look at this chart that I've got on my screen here, which is the monthly chart, and we'd say, whatever this is we're looking at is going to go to 1156. Because at 1156, it's a natural retracement. It's a 0.618 retracement. And it's inside, a nice big descending price channel out there. And we'd say that's just normal. In fact, we'd say, heck, if it fails there, 946 is more likely the call out there, which is really what K Rico's thoughts were. It was going to head down to maybe about 950 or so. And I can't really argue with them, because until this descending price channel gets broken, I've got to say, yeah, I agree.
Mm-hmm. And that would mean, most.
Now, here's the other thing. So back on the euro. So on the euro, let me share with you my euro chart out here. Now so we probably can get the signal, I think, Rick, more from the euro as to what's going to happen, because it's the longer term chart on the euro. In this case here, it's the weekly chart. The monthly shows the same thing, but you see on my screen here right now on the euro, this is the long-term descending price channel, the red diagonal lines on my screen, and that takes us back, Rick, to 2008. And we can see that each time now that price has gotten up into that red descending price channel line, it has stopped dead in its tracks. And the last time up here was just 2 weeks ago. We got up and tested it on October the 25th. He opened up last week and gave a nice big old bearish engulfing candle. Now, it's got a competing channel in here. Those are the blue diagonal lines going across my screen. But if we do see a close below that, the euro gets weaker, the U.S. dollar gets stronger out here. So I think from the euro also, it made its run for the highs, and it ran into that significant resistance. The first time that it was up there was back in 2008, had a big, huge decline. Then it was up there in 2011. It took a while, but it ended up making a move lower. And now we just got up there again just last week, and that acted as significant resistance. So that's, in the longer-term charts, as you know, they've got more meaning to us than the than the daily charts. Just kind of give us a little bit of more of an EKG. So I hope that helps put it together.
I think there's head and shoulder patterns on the dollar, and it sure looks like it. They don't always work.
Yes.
But the euro would go to 132 or just below it, and then bounce back to 135, which is a neckline again. But anyway,
absolutely.
We'll catch you later, eh?
Okay, great to hear your voice. Take care. That was Rick from British Columbia. Dow's up 89, S&P up 5. We'll be right back, folks.
Patterns, profits, and and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 75. S&P is up 3. I saw Angela in the den had posted a bearish engulfing candle on the 30-minute chart for the ES, and oh, yes, she is right about that. One of the tools that I've developed, what I do in my off time, well, whatever, when I'm not on the air, if I'm in addition to looking for trades for clients, is really putting together successful trading strategies, and I like to automate them and then go back test to make sure that they produce a positive expectancy. That's really what this game is really all about. Now, what it also created here, if you're watching us on Tiger TV, created one of my favorite reversal patterns, which is a price relative strength divergence pattern out here. That's a black line. I've got it automated, so it sends me a signal to my phone, my computer, desktop, wherever it is that I am, and I can turn that trading system on so it automatically trades and takes a trade in the ES or whatever it is that I'm trading out here. So we did get that pattern. We got the confirmation. Right now, the ES is trading out at 1762. If you'd like to understand this pattern, how to trade it, just get in contact with me, Steve, at TFNN.com. I've got some great workshops out there. Basil's got a great workshop that he's going to be doing this Friday, so don't forget you got the opportunity to take advantage of the Tiger Dollar promotion that is out there. You've got the holiday season that is coming up here. People are going to be asking you, what can they get you for the holidays? And you're going to say, don't get me anything. Don't give me anything, honey. I don't need anything, right? But the reality is they're going to get you a gift. Have them give you the gift that lasts forever. Give them a gift. Get them to give you a gift of Tiger Dollars out there. That way you can go ahead and you can use that. You can educate yourself. In fact, get an early present. Go attend Basil's workshop on Friday. Send me an email. You can watch one of my archive workshops if you'd like to learn this trading strategy out there. Anyways, let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. You wanted to take a look at natural gas. Are you in a trade, not in a trade?
No, I'm not in a trade. It's like
okay.
Catch a knife.
Yes, yeah. When we looked at the continuous contract on the weekly chart out there, it looks like natural gas is something to be paying attention to and to look for a long trade out there. I did say that if it closed this week where it was at, it would give us a hammer candle. I think the better trade, and because I know that you would be going long in one of the futures contracts, is I'd be paying attention to right now. I've got the December contract up on my screen. It broke a consolidation range. That's the yellow box going across my screen. When you break a consolidation, your move is going to typically be equal to or greater than the consolidation. As we pull that back here, that's a small yellow box going across my screen. Lo and behold, if it completes that move, it forms a 1.272 butterfly, and that's at about the 331 range out there. So even though we had a nice candle yesterday, key reversal session yesterday on the December contract. This other pattern that is out, I'm watching it closely. I think right now it's just filling the gap out here that it created between November 1st and November 4th out there. So I think it's just completing the gap. Be patient. I think right around 3:30, and then if we see, that's at 3:30 is where I wanted to have seen the key reversal session or some type of bullish pattern out there. So I would just sit tight and wait for this pattern here to complete. All right, Lou?
Okay, so we're talking about down to 3:30, huh?
Yeah, down to 3:30, but boy, then I've got to see a bullish reversal signal. Because if a 1.272 butterfly isn't going to work, that says it would be a 1.618 butterfly, and a 1.618 says $3.11. I don't know which one. Those are the better patterns at the moment to be trading. As I say, we got a key reversal session yesterday, but the gap says, nah, I don't think so. I think one of these other two patterns, either 311 or 331, are likely going to be the spots to take a long position.
Okay. Thank you.
Alrighty. Hey, thanks so much for calling. We're out of time. Folks, stay tuned. Basil Chapman is up next, and it is wonderful Wednesday. That means we've got Larry Pesavento. We've got Daryl Martin, David White, Wednesday. I don't know if I know Andy Heck won't be here today, but the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. Look forward to seeing you soon.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online Master Trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.